Hello and welcome to Trade Finance Talks. I'm Mahika Ravishankar, Deputy Editor at Trade Finance Global, and we're coming to you from the 2025 Cybos Conference in Frankfurt, Germany. I'm joined today by Pratik Koala and Rasika Raina to talk about the move towards instantaneous cross-border payments. Pratik, Rasika, welcome to Trade Finance Talks.
Thank you, Mahika, for having us.
So to start with, could you just give us a bit of background and introduction to your roles within MasterCard and also tell us what brings you to Cybos this year?
I work for MasterCard in the money movement space. So we have a product portfolio of money movement products called MasterCard Move. I run the product for that.
Pratik Koala. I run Global Transfer Solutions for MasterCard. Global Transfer Solutions is a combination of two products, MasterCard Move, as Rasika mentioned, and then bill payment.
So kind of my experience with MasterCard is just tapping my phone on a card machine or my card, and then the money gets deducted from my account basically without me knowing. Is this the same in cross-border payments, Rasika?
I think cross-border is kind of more complicated than that. I wish it was as simple as you defined it. The instantaneous nature of P2M transaction, a person-to-merchant transaction, which is what you do when you tap a card. You go into a store and tap a card and walk out with goods. But in cross-border payments, it can be instantaneous. We have reached a lot of, especially in the remittance space, we have reached a lot of instantaneous payments, but it comes at a great cost. It comes at a great cost because by its very nature, cross-border payments means that there are different regulators around the world who have the regulation governing these kind of payments. So in order for us to actually get to that dreamlike state of instant payments nirvana, you need to have these compliance and regulatory harmonization has to occur across the globe. And that is going to take us quite some time to get there. All the regulators and the compliance frameworks have to align and coexist so that a single transaction would be governed by the same rules globally. And we haven't reached that stage yet.
So if I could just add to Rasika, the desire is to get to the same experience. It won't be tap the phone because you are always making the payment online, not tapping the phone. But the desire is that it becomes instantaneous. The user experience is very similar and seamless like it is. But cross-border is more complicated because it's just more regulations there. We need to take care of, when the money movement happens, it's more compliance risks that we need to worry about. Those needs to be taken care. That's what we are focusing in MasterCard to address those. So the experience becomes very similar, if not same, like a consumer purchase payment.
So kind of on that, Pratik, in terms of the interoperability between different parties, how does the process differ in MasterCard?
I think the process doesn't differ. The approach that we took to make consumer payment seamless is the same approach that we are taking to make money movement seamless. If you go back in the history, the card payment when you were traveling from UK to say UAE, it was not that easy. We still, I was yesterday in a coffee shop and they said we don't accept cards here. So we are still working on that, but that journey has gone way far. Whereas in cross-border, because that also needed to go through the regulatory compliance and everything, that journey is early stage for cross-border, and we just need to take care of all the regulatory needs that every jurisdiction has so that we can move money in the same way. We need to get integrated into the local payment schemes. So when somebody sends money from US to Germany, it reaches there, all the KYC, all the due diligence is being done, and it gets deposited into the bank account. And all this needs to happen in fraction of seconds, which is what consumer experience is. That's what we are building towards.
So moving now to talk about the different parties and amounts that may be processing these payments, I want to start by talking about remittances. Rasika, what are the unique challenges in this domain?
See, remittances are very unique because the type of remitters are different, right? So there are sophisticated digital remitters who go online and remit a payment, but there is a large percentage of our remittance flows are actually geared towards what we call the blue-collar workers, right? Somebody who actually goes to a kiosk, deposits money, and expects the money on the other side. So the ecosystem that governs remittance is very fragmented amongst instrument types. So, for example, some people send to bank accounts. Some people send to wallets, some people send to cash. But in everything, you have to understand, how do you actually make sure that the money is there available for us to distribute it amongst the recipients? So that is what we call the liquidity positioning has to happen upfront, and that is a very difficult process. So that leads to fragmentation, because the remittance business is very capital heavy, because you have to pre-position liquidity in all the markets. So I don't know, because if a remitter comes to me, he might want to send to Philippines or to India or to Pakistan. I have to make sure that the liquidity pools are available there for us to remit in real time. So it's a very different business. It is, but the expectation of this business is very much card-like, because they expect instant payments to hit their families. And sometimes what happens is the recipient is actually sitting at a kiosk, at an agent, waiting for the cash to come in. So it has to be instantaneous, and that is very, it's heavy from a product perspective, it's heavy from a regulatory compliance, because everything has to happen in a microsecond.
And how about moving to slightly larger amounts and to organizations? I think maybe in terms of SME payments, are there any similarities in remittances?
I think it's similarity. I think I look at the foundation that needs to be done for any cross-border movement. First, we need to ensure that it reaches in the way the remitters want it to reach in the country, in the form, whether they want the money into a bank account, or they want to pick it up cash, whether they want it in wallet. So we need to create the reach there. That's what Rasika was talking about, how do we keep reach there. Then it needs to follow through all the compliance KYC. So when money is sent, we ensure that the right money is going to the right place and it's compliant in both the jurisdiction and that. Those fundamentals stay same, whether it is we do a remittance, which is person-to-person payment, like me sending money to my mom, or whether an SME trade payment is happening. But the need of those two segments are slightly different. Now, for example, in remittances, people might send money and the recipient don't even have a bank account. So they will have money in bank account, or they could have it in wallet, or sometimes they want to pick it up in cash. Whereas in SME payments, it's most likely it will be bank account. They will not have it in wallet, or they will definitely not pick up cash. So from reach perspective, that's one difference. Second, I think the difference on SME is the transaction size. Remittances typically are more for personal use, so the transaction size are lower, whereas for SME, the transaction size are going to be bigger, because SMEs are trade payments. The other need which will be different is, in remittance, you will typically go there, buy the money, you will give dollar, you want Filipino pesos, the conversion happens then and there. In case of SME, the trade payments don't happen every single day. They might want to buy currency for 3 days from now, which means that they need forward contracts. We need to be able to provide those forward contracts to them. So the treasury needs for an SME might be more evolved than the need that they have. The data need that SME needs could be different, because they might need invoice instructions to be going along with the payment instruction, so people can do the reconciliation. So SME, the foundation element stays the same, but then the value add that goes on to SME will be significantly more than what the remittance payment is. And that's what we are focused on, because I just want to clarify, we are a business to customer or consumer company. We enable our banks and partners to serve their end customers. So we are not going directly to an SME. What we are trying to do is we are trying to bundle what we call it a proposition for an SME to hold the money, collect the money, and remit the money. We want them to provide the competitive FX rate, whether they want spot or they want forward. And we want to enable them to send money to all their trade corridors. And then we are building the value-added services, which makes it's very intuitive for an SME to transact digitally, because that's what not banks are serving today. So we are packaging all of this, bundling it and giving it to the banks so that they can enable to their SMEs. That's what the SME needs are. That's how we are focusing on SME needs.
And one of the things we have to understand, especially in the remittance industry, we are right now grappling with a very fine line between expectations which are instantaneous, expectations which are, it needs to be cheap, money, transact cheaply. But we have massive overheads, right, of compliance and regulatory and, as I said, liquidity positioning. But the G20 goals are driving towards under 3%. So we have to so the industry itself is grappling towards the idea that how do we get to that 3%, which is really good because it benefits the end consumers. But we have to understand that today the infrastructure doesn't allow us to get to that 3% very easily, right? That is a goal that we all are looking at, but it's still far away. As I said, till the alignment doesn't happen between the various participants, we cannot actually achieve that level of, reduction in the pricing at least.
And with these, you've mentioned instantaneous payments, you've mentioned low costs, even balancing that with the overheads. Does security factor into this as well?
Yes, security is in everything we do, right? So if I cannot do a secure payment, then I shouldn't be in the business. So that is a given. That is a part of our value proposition.
So if I add, look, whatever MasterCard does and whatever needs to happen in payment, trust is fundamental. And trust cannot happen without safety and security. That's just foundational element of any payment transaction, whether it is domestic or cross-border. That's what we do. MasterCard and MasterCard Move as a product. We build security, fraud prevention, as the base of the product. If that doesn't happen, there is no cost coming down, there is no transaction that's going to happen.
We do a lot of overlays, which are account validation, verification, name validation, verification, and decision intelligence, like is this a fraudulent transaction or not? So we're using a lot of AI in actually figuring that out.
The rates at payment fraud, or at least at attempted payment fraud, have risen in recent years. So have you been adapting this security model along with those new threats?
Absolutely, absolutely. I mean, there are so many, you'd be surprised in the P2P space especially, there are so many different types of frauds that happen, like account takeovers is a very normal type of fraud nowadays, or scam, what we call the romance scams. These are all in P2P space. And we have built and we are in the process of building a whole lot of consumer fraud protection overlays over our product.
One of the biggest difference when you asked about domestic payment and cross-border payment, and Rasika mentioned that it's the regulatory and compliance. If you think about, that's where we need to really be very, very good at, because otherwise, if I'm sending money from US to India or to China, anywhere, and if that money is the wrong money going there, the Chinese government or the Indian government will never let the money go in. And even before we started, we lost the battle. So security, compliance, risk management is going to be fundamental for cross-border to be simplified. Now, how do we make that simplified? How do we make that whole chain of compliance seamless is the one which we need to work on. Because if we go from one place to another place to another place and we keep checking everything, it's going to be very difficult. So that's where the digitization, AI, everything is going to help us in a meaningful way.
And to come back to the different issues facing different payments amount in terms of cross-border payments, Rasika, I want to talk about corporates and larger amounts. I think, am I right in understanding that probably the issues facing SMEs are just the same for corporates but scaled up?
Yes, exactly. They are scaled up, and corporates have different decision points, right? Slightly different, like SMEs more focused on liquidity management, right? I mean, they need cash flows, more liquid cash flows, right? I mean, as opposed to a corporate. And even corporates have that. But the problem is that the way remittance industry has evolved into real time, the corporate industry hasn't, right? Obviously, because of there's we talk about corporates wanting predictability and certainty, and not 24/7. That is not true. Why won't a corporate want the same level of instantaneous payments that everybody else requires? But on the corporate side, because of the way the flows move and the way the participants involved, it's very difficult to get alignment across all the participants, whether they're global banks or tier 2 banks or tier 3 banks. So, for example, we have a product called MasterCard Move for commercial payment that tries to address this problem by taking a more holistic view of the entire situation. Let me bring you back to the card analogy, right? When I walk into a store, right, I purchase goods, and I walk out of a store, with hundreds of dollars worth of goods, the merchant lets me do that. Why? Because I've tapped my card inside, and behind that tap lies assurance of the network that the payment will be made with certainty to the merchant at every single day at the same time. So that's a certainty. That he knows that there is a trust, there's a MasterCard trust behind that. So we try to port over that to commercial payments, saying we are going to build out a scheme which provides the same trust and security to corporates globally, to the banks whose customers are corporates, right? So, where every participant in the ecosystem knows what has a level of certainty and has a level of trust in the system that the payments will move and there'll be a guaranteed settlement on those moves. So those are the things we are trying to do in the commercial payment space.
So with all these different parties, different regions with jurisdictions, with all this variety, how can the whole industry move forward towards faster cross-border payments, Pratik?
So I would say two things. One, I would say it will come down to collaboration and innovation. I think I'll give you a couple of examples, and we touched upon in brief conversation on the way we are collaborating. So we talked about SMEs, and I talked about SME needs forward FX booking, SME needs sometimes hedging. We are collaborating with Corpay as a partner who have a leading solution for providing hedging. And so we came together, we said, look, MasterCard Move has a great proposition, great reach. Why don't we collaborate and provide that to an SME? We came together, that solves the problem for SME. We did not go independently. So that's one. Second, Rasika was talking about MasterCard Move for commercial payment. This is a solution for large corporate who move money in 10 million, 20 million, 30 million kind of size. It today goes through correspondent banking network on Swift messaging, which is where the conference is happening. But it's still very inefficient. It sometimes takes the rejection rate from the time transaction goes to the transaction received, 15-20% transactions get rejected. What we are doing is we are collaborating with Swift and large clearing banks and bringing MasterCard card analogy that Rasika was talking and making them 24/7, a surety of payment and clearing and reducing the rejection rate. Another example of collaboration. Third, like card network system was built over many, many years. This account-to-account network system where cross-border will work needs to be built out, which means we need to partner with more and more. MasterCard Move recently partnered with a regional scheme, Buna, to make those direct connectivity so that card becomes efficient. So that's just 3 examples of collaboration, and that's why it's super important to collaborate. I'll touch upon innovation. So I'll talk about 2 innovations. First one being stablecoin. Everybody is talking about stablecoin, digital asset. It moves instantly. Cross-border, we want to bring the same instant experience. So we are trying to see where all stablecoin can help us to move money instantly. So earlier this year, we announced that MasterCard will support stablecoin, which will help move money faster. So that's another innovative idea that we are going after. Second, we talked about the fundamental is safety, security, fraud prevention for cross-border to evolve. Artificial intelligence is embedded in our system, and we embed it in our system to improve user experience, to prevent fraud, like for example, sanction scoring, we use it, fraud prevention, we use it. So this is just 2 examples of how we are embracing all the new technology so that we can make the whole payment system more protected, faster and cheaper.
And interoperability does not happen just between participants. It happens between participants, yes, across geographies, across networks, right? Because that is the fundamental change, because it's not about adapting to change. You have to lead the change, and MasterCard is in that position to actually lead the change. I think we should, and this kind of precision that we are talking about, it's really required, and it's very irrespective of where the bank is in the payment ecosystem or in the payment chain. They would like the precision that we are giving them. Like he talked about, reducing rejections, and we have to return payments sometimes. So how does MasterCard Move, for example, play in this space. So we have like a concept of pre-validation of payments, so that clearing of payments happens before the settlement of the payment. So you've validated your payment even before the money moves. So if you want to reject, you can reject upfront, and we help you reject those payments that don't sit either are problematic or are not in line to your risk appetite, for example. So all these, I think, changes that we are introducing into our system, into our payment products, are actually, I think, very beneficial for the industry at large.
So do you think that a move to 24/7, 365, always on cross-border payments will help financial inclusivity? Is there a risk that it might widen some divides?
No, I think because it's when we talk about a network, right? It is, so if you give a card to anybody, like you give a payment card, whether it's a big corporate, a T&E card, or you give it to a debit card to a person who has, $500 in his account, the experience they get is the same. So the idea of bringing a network together is to foster trust and to foster inclusion, and that is what it's going to do.
So if I go back to your question, does real-time payment and in cross-border will improve us? Absolutely, yes. If you think about the reason G20 has a target to reduce the cost of acceptance and cost of any cross-border flows, because they want to improve. Like today, if I were to send money to, say, Nigeria, I send $100, they only get $90, or sometimes they even get $85. So there's a $15 transaction cost, which is 15%. If I brought that down to $3, I send 100, they get 97. The life of those people will improve because they have gotten $12 more. And they are going to spend that $12 more, which means the economy is going to be fueled by more expense.
Yeah, it's great to hear the emerging markets will benefit from all of these moves.
It's not an only emerging market. Emerging market was just as an example. Today, if I think about, we talked about SME. Today, SMEs, it takes sometimes 3 days, 4 days, 5 days to receive the payment. Let's assume that we make that payments instantly. They get a much faster liquidity, which means they can do more investment, they can produce more, and they can export more, or they can consume more. So the whole instant nature combined with reducing the cost of moving money is definitely going to help the economy and individuals.
Perfect. Thank you both so much for joining me. It's been a real pleasure and touched on a lot of big themes from the Sibos conference. So I've really learned a lot. Thank you.
Thank you
so much, Mahika. Thank you for having us.